This is such a fascinating story right now because it's about people and two people who have a lot of Fed experience. Why is this such a big deal for markets right now between Biden, Powell, and Brainard? Who ends up getting this, in your opinion?
Well, it's a big deal because there is so much ahead for the Federal Reserve in terms of the inflationary outbreak, for example, and then the other is how banks and the financial system is going to be regulated and supervised in the future. You have Powell and Lael Brainard are very similar in terms of their monetary policy, but there are important differences in their attitude towards how these institutions should be supervised. And when you think about it, that's not as big a deal in the sense that their biggest headache ahead is trying to deal with the emerging inflation and the economy going forward. So when it comes past that, then it's a matter of party loyalties and as they move forward from this point forward. But the big deal in monetary policy, I don't think there's a lot of difference between the two.
In your mind, is there a clear-cut better choice, one or the other? Is something happening right now with regard to Jerome Powell's tenure here that sheds some light on whether or not he should be the future Fed chair, or whether or not there needs to be some kind of changing of the guard? Or is that lack of continuity going to be something even more of a concern than trying to make things somewhat different for the Fed?
I don't think the continuity issue is as big a deal as some are saying it is, because in monetary policy, there is a very similar approach and philosophy between the two. I think that the big differences are in the supervision, but the reason you have the kind of the attention to it is the uncertainty about it. No one knows exactly which will be chosen and what it means for Wall Street and the institutions. But as far as policy going forward, they both are going to be, I think, approaching it in the same manner. You have some outbreak in inflation. You have the issue of tapering and whether or not you raise rates sooner or later. They're going to approach it the same. And I think there's not a whole lot of difference. There's not a lot of light between them.
So if there's not a lot of light between them, then let's focus on the policies that whoever is going to be heading the Fed will be battling. You mentioned the inflation thing. If it is, do you feel as though this inflationary picture is truly transitory, or is it something more structural that we could see developing more in the coming quarters and years? I point to lumber prices, which were sky high at one point. They've fallen right back down to earth. There are some signs maybe that the oil market's starting to cool off. It's still hot, but cool off a little bit. Is this transitory, or is it not?
I think it's more than transitory. Yes, prices will go up and down, but overall prices are rising still. And they're going to have to do more than just wait it out and think that it'll take care of itself. There's some endemic issues with inflation. First of all, you have more than a decade of asset inflation that has been going on in housing, commercial real estate, agricultural land, art, the stock market itself. So there's a lot of momentum for asset inflation, which is now carrying over into goods inflation.